Hello and what is going on, lovely people of the internet? It's Hoop Money here with another video for you guys today. Today we are going to be going over Roblox stock and whether it's a good buy or a bye-bye. I did a lot of research in the making of this video and I'm excited to share this information with you guys. If you guys are new to this channel, make sure you subscribe down below and turn on post notifications, but only if you enjoy this content. I want to earn your subscription. So yeah, but the number one thing you can do for me, and this will help me more than anything else, is to like the video. And that's because liking the video, it helps share my content with other people on this platform. YouTube's a great place, and in order to get that algorithm going, just like the video. So Roblox is a new stock to the stock market, and I think you guys should be careful with this one. In this video, make sure you watch it all the way through, all the way to the end, because I'm going to be going over an analysis of the company, its valuation, and the risks involved in buying this stock. So without further ado, let's get right into the video. Alright, so first you may be asking, what exactly is Roblox? So Roblox is this online gaming hub. It's on the computer, it's on your iPhone, it's on the Xbox, and people get together and they play custom games that are made by individual content creators. So Roblox itself is not the game, but they have a bunch of mini games that are custom created, and that's really the big appeal to this game. So games are created within the Roblox studio and the platform's proprietary game development tool. Furthermore, users create their own avatars and they purchase Robux to do so. The entire library of Roblox contains more than 50 million games. It's a lot of games. Roblox is extremely popular with the younger generation, with their daily active users doubling from 2019 to 2020, 17.62 million to 32.59 million. Now this is in part due to the COVID-19 pandemic. Kids are staying inside more. However, a lot of people have said that regardless of the pandemic, these kids will be playing this game no matter what. These kids are so addicted to Roblox, and I believe it. I believe that they're going to keep playing it regardless of pandemic or not. Alright, so Roblox has recently gone public via a direct listing rather than a traditional IPO. We're going to get more into that later. We're going to see why exactly they went the route of a direct listing rather than an IPO. And this is something you need to pay attention to, so make sure you stick around to the end of the video to make sure you get all the information, because this is actually a really crucial piece of information. So Roblox actually earns most of their revenue through selling their in-game currency called Robux. There is a catch, however, and they do not get all of the revenue from the Robux. And this is actually what I consider a pretty big risk to this company, is that they are giving about 25% of their revenue to the App Store, whether it's Google Play, whether it's the iPhone App Store, whether it's the Microsoft App Store. They are getting 25% of the cut when they sell these Robux. So another 24.5% goes towards the individual developers. So the people that are making these games are actually the ones who are getting 25% of the revenue. And the reason why I do not exactly like these numbers is because when it's all said and done after the cost, 24.5% goes to Roblox. So the individual creators are making the same amount of money off of Roblox as Roblox itself, and then the App Store is actually making more money off of these Robux transactions than Roblox. So at that point, why don't you just invest in a company like Apple, where you're going to be getting this revenue anyways, or Google, or Microsoft, you'll be getting these revenues anyways if you invest in those companies. So why invest in Roblox if you can invest in them? Now this is awesome if you're a developer, but not so awesome if you're Roblox. So some developers can earn up to $1 million in a single year by monetizing their games. And developers are set to earn $250 million in 2020 alone. So why would Roblox go public via a direct listing rather than a traditional IPO? And this one's actually pretty interesting. So we actually went over this on our Coinbase IPO video, which I'm gonna leave a thing up there that you can click on. But essentially, a direct listing allows for private shareholders such as the CEO, CFO, and other board members and other people who have privately invested in their company to offload their shares to the public. And as we'll see later, we'll see that a lot of this offloading has happened. A traditional IPO would have raised additional capital for the company by offering new shares. So if you're going the route of a traditional IPO, you want to raise money so you can expand your business. A direct listing is so original shareholders can cash out on their previously owned shares. Now, why this is a risk, we're going to get into that during the valuation section, so stick around for that. But this is a way for private investors to cash in on a hot IPO market at potentially overvalued prices. And we can see that the CEO of Roblox sold 1,300,000 shares on IPO date, and that was at an average price of $65 a share, which would actually give the company a $42 billion valuation, which I personally think is way too high for this company. All right, so now we're going to get into the valuation of the company. So the first trade was about $65 a share. This gave them a valuation of around $42 billion. All right, so that's very high considering their previous valuations. So just about a month ago, they raised private funds for $30 billion valuation. So that's a 25% increase. Roughly a 25% increase in a month for private investors to sell to the public. I don't know about that. And with this IPO market, yes, a lot of premiums are being paid for a lot of these tech companies. So Roblox seized this opportunity and took it and just wrote it out, and yeah, they are making a lot of money off of people investing in this direct listing. Now, this is what I find the most interesting is that in February of 2020, so just a year ago, the company was valued at $4 billion. Guys, that means that in 1 year, Roblox has gone up over 10 times in valuation. This share price would be $6.50 a share if this was 1 year ago today. Now, this is another sketchy part about the valuation. So it was intended to hold an IPO in December, but it twice delayed the offering. So they were originally going to set out this new IPO at whatever share price they had then, but then they saw DoorDash and Airbnb get insane valuations, which they both did. So that is true. They both got very insane valuations as well in this super hot IPO market. And then they delayed their offering because they're like, oh, well, if people are paying these ridiculous prices for stocks, why would we sell it at a good price? Why wouldn't we rip people off as well? And yeah, I think it's pretty sketchy, but now we're going to get into the risks. So this was taken directly from the S1 filing, and this is what the company said themselves. These are the risks involved. So their first risk was that we have experienced a rapid growth in recent periods, and our recent growth rates may not be indicative of future growth or growth of our market. So this is very interesting. They're basically saying that maybe this past year it grew a lot, and they're taking advantage of that growth by doing a direct listing right now. So that can be a risk. The company might not grow as much in the future, and we can look at the financial statements to determine if they're investing in their company or not. But for now, I'm going to say it is a growing company because just seeing how much kids like this, I think this company is definitely going to grow. We have a history of net losses, and we may not be able to achieve or maintain profitability in the future. So this basically seems like a standard risk factor for a growing company. However, I do agree that it might be hard for them to obtain profitability when they're giving away over 50% of their revenue to outside sources, and then 25% of the revenue is going to costs. So they're only left with 25%, which they have to pay people with, they have to do other things with, and at the end of the day, yeah, they're not going to be profitable. So we'll see what happens. I think they really need to change their business model and their revenue structure in order to become profitable, but they may have a different idea, so that's something to pay attention to in the future if you are going to invest in this stock. The recent COVID-19 outbreak has significantly affected our business and operations. So I skimmed through this section of the S1, and originally I thought that it meant that the COVID-19 outbreak scaled up their operations, and in the future it'll scale down. But I read through it, and it was basically a standard thing saying, hey, COVID-19 has negatively impacted our business, yada, yada, yada. So I don't think we should pay much attention to that one, because COVID-19 definitely was something that helped their business as people stayed inside much more often than not. And when you stay inside more, especially when kids stay inside more and kids don't have to go to school, yeah, they're going to be playing Roblox a lot more. So I don't know if COVID-19 negatively impacted their business, but they said that's a risk, so we'll leave it be. And then the last risk that I've listed here is that they need to effectively operate within the requirements of mobile operating systems. So this is actually a big one, because recently everyone has heard Fortnite being removed from the iPhone App Store because they were trying to do some in-game payments. So this is huge because Apple likes to take their cut. If you download an app from their app store, if you're using it on their iPhone, they want to take a cut of your in-game purchases. If Roblox tries to break free of this, then yeah, they can be subject to being removed from the iPhone App Store, which will definitely hurt them, as a lot of kids use this game on the App Store. So as you can see here, this is basically their income statement, but it doesn't say it's an income statement, but it has the revenue and costs. So we're just going to quickly go over that. So as you can see, they have a loss from operations of a pretty hefty amount. It actually quadrupled from 2019 to 2020, which shows that with an increase in business, it increases their costs a lot. And that is very interesting. Their revenue has also increased by almost double. No, not quite double, about 1.7-ish it looks like. And yeah, here's the interesting part. So their cost of revenue increased about double, all right, while their revenue did not increase double. So that's very interesting to look at. Same with their infrastructure, increased more than double. Research and development, that went up a solid amount. I'll take that. General administrative, about double. And then sales and marketing, about double. So it looks like with the increase of users on their platform, it also increases the costs. It increases the cost of revenue because they have to pay everyone still. And if they make more money, they have to pay more money just due to their business structure of dishing out that revenue to everyone. Hey, you get 25%. Hey, you get 25%. Oh, you get 25%. Oh, we get like, what, 20 like nothing? Oh yeah, we get negative profits. Alright, so I don't have much more analysis to do. As you can see, I'm not very bullish on this company. I don't think it's worth what it's valued at right now. I really think that the board was like, hey, we gotta cash in on these new investors. They see Roblox, we're gonna make some money off them. So yeah, I really think that they knew exactly what they were doing here, and they delayed their IPO twice because they were like, oh, we can raise more money. And they're not doing an IPO, even though they are a company that looks like they do need money. But they weren't doing an IPO, which is interesting because an IPO, you raise cash so you can expand your operations and become profitable. They did not do that. They raised cash for their own bank accounts by selling their shares to the public, but they are not raising cash in order to become profitable. I cannot say I agree with this valuation. I do think the price is going to drop on Roblox. I don't think it's worth $65 a share. I think it's probably worth maybe $20 a share. That might be a bit extreme. If you guys are bullish on Roblox, I'd be happy to look at the comments and reasons why you're bullish on Roblox. I know Kathy Wood bought a lot of Roblox, and hey, it's a great company. Like, it's expanding rapidly and kids love this game, so I can see why you would think it's going to increase. But just looking at these financial statements and valuation, it's really difficult for me to see the value in this company right now. So I personally did not invest in this company. Feel free to do whatever you want. I'm not a financial advisor. I'm not telling you to make a decision. I'm here to educate you guys and make sure you guys can make a good decision. Don't follow me. Do your own research, figure it out yourself, and Yeah, that's all I got for you guys today. If you guys are still here and you have not yet invested in the stock market, promo alert. You guys can sign up with the link below. Deposit $100, get 2 free stocks on WeBull, valued up to $1,600 a stock. And yeah, that's a great way to get invested. You can buy some Roblox shares with that money. Who knows? You can do whatever you want with it. It's free money, so you might as well if you haven't already. And yeah, that's all I got for you guys today. And peace!